Hi guys, do me a favour before we get into this and hit the subscribe button and ding the bell, and then you'll get notified every time I upload a new video. Take it easy. The interest rate is irrelevant. Now I know that makes me sound like an absolute lunatic saying that. You've been brought up probably since being a small child to believe that the lowest price is the best deal, so therefore the lowest interest rate is the best deal. That's wrong. Okay, and the problem is that banks know that that's what you think. So you go on comparison sites and you look, when you're looking for a mortgage, what you're doing is you're looking for the lowest interest rate. Your parents tell you, look for the lowest interest rate. That's what you get told to do. So that's what you believe is correct. Because lenders know that, what they do is they exploit that. Okay, so what they're doing is quite often the lowest interest rate will generally have a higher arrangement fee or an arrangement fee where a slightly higher rate might not come with an arrangement fee. Okay, now the problem is all of a sudden it's become very difficult for you to compare one mortgage against another because each person's circumstances are completely different, and the amount that you are borrowing versus the amount of deposit that you're putting down, so therefore the loan to value ratio is different for almost every client or customer. The amount that you are potentially saving by having a slightly lower interest rate from one bank to the next is different for everybody. So the analogy I like to use is this. There's two banks next door to each other. One's offering 3.5%, one's offering 3%. I know those figures are a little bit high based on current climate, but that's the way it is. Which one are you likely to go in? 3. Of course you are. That's what people do. Now I guarantee the 3% advertised in the window of that bank will probably be somewhere in the region of about 12 inches high. The small print right at the bottom that says it comes with a 999 arrangement fee, which is pretty standard, 999, 995, all pretty standard arrangement fees. That will be in tiny lettering right at the bottom because they do not want you to see that. What they want you to do is go in, make an appointment, wait for your appointment, turn up for your appointment, and then while you've sat there for 2 hours and they say, well, unfortunately, you don't qualify for that deal that you came in for. We can offer you this instead. What they've done is they've just upsold you. I'll come on to that in a minute. You're more likely to go along with it because you invested 2 hours of your time. Do you want to do that with every single bank? No, nobody does. Okay, so I said to you that the amount that you can potentially save is different for everybody. Okay, so let's base that on a 2-year fixed rate, 3.5% versus 3. One's 999 fee, one doesn't have a fee. If the saving per month is £10 a month, then you've saved over 2 years, you've saved £240, but you've paid £999 to do it. So therefore, the bank hasn't lost money. It's actually gained money because you've given the money up front effectively. Usually they'll say, don't worry about that, we'll add it to your mortgage. Genius. So now you're paying interest on that. But they've capitalized on your ignorance straight away. You'd actually be better off going next door and having the one with a higher interest rate because you will, over the 2 years, you will save money. So that is the key. The saving is when you're looking for a mortgage, you don't want to be looking at lowest interest rate or, in fact, lowest monthly payment. What you want to be looking at is how much am I physically going to give that lender over the course of the 2-year period I'm stuck with that lender? Or if it's a 5-year fixed rate, how much am I giving them over the 5-year period I'm stuck with that lender? It's that simple. It factors in that number. They don't want you to do that. Of course they don't, because they want you to pay them £999 to have a really good deal. So they say you might be saving £10 a month. They've made more than that. They're not bothered. And at the end of it, it'll be a higher rate when you come off your fixed rate. They don't want to give you their best deal. Of course they don't. They're a bank. They're there to make money. They don't do anything else. They just make money by using other people's money. So I hear quite often, you know, quite a lot of people will naturally, when they're first looking to buy a house, their first port call is their bank because they will look after them, okay? No, they're there to make money. When you walk in, you might be walking in because you've seen an advertised interest rate on the window, 12 inches high, that you went, ooh, that looks really good. Of course, you've gone in, you've sat there with a mortgage advisor, probably for about 2 hours of your life, listened to all the compliance spiel that they've given you, and then they say, oh, by the way, you don't qualify for that, but you can have this. You've been upsold. I mentioned that earlier, okay? That is their job, to upsell you. They want to give you the worst possible deal that they have. They just won't say that to your face. They will show you, eventually they'll show you deals that, what they're hoping is they can show you the highest rate deal as possible without you wanting to be sick and without you going, nah, I'm not doing that. So they've got to try and judge that, but in real terms, they want to give you the worst deal. They're just not honest about it. Okay, so I've kind of mentioned this already, but there is absolutely no benefit in loyalty. The natural thing for most people to do is, I'll go and see my bank, they'll look after me. I've had people, over the course of 20 odd years, I've had people say to me, I've banked with my bank for 30 odd years, I've banked with my bank for 40 years, they will do it. No, they won't. If it doesn't tick their boxes, it doesn't matter how long you have banked with them, they will not bend the rules because banks are very, very black and white. You either tick the box or you don't. It's that straightforward. So don't believe that the bank is there to look after you. They're not. They're there to make money and exploit you. And banks will quite happily exploit their customer base. They work off loyalty. They know that customers are generically loyal. They will exploit that. You don't have to have life insurance to have a mortgage. A little bit of a myth is lenders or banks would love you to believe that this is the case, and they kind of don't say anything to go against that, because what they want to do is sell you life insurance. And I notice I use the word sell because they generally don't give advice, and they don't give very good advice, if I'm going to be honest, on what you should and shouldn't be doing. They want you to take life insurance because it's an extra sale. It doesn't necessarily mean you need it, okay? You don't have to have it as part of the contract to have your mortgage, although they would like you to think that. Some examples of people that do not lead, in my opinion, life insurance. Now, I'll do this, I'll talk more in detail about this in another video, purely on life insurance and how you're being duped. But for example, a single person, early 20s, buying a house on their own, no dependents, no partner, no girlfriend, no boyfriend, no dog. Do they need life insurance? Not really. Do they give a shit if they die? What happens to that house? In most cases, no. I've had the odd person say, I'd like it to go to my parents. Really? By the time you die, your parents are probably at an age where, well, if they're still here. But no, single people generally do not need life insurance because it doesn't benefit them because they're dead. Okay, last on my list, lenders actually think you're stupid. Okay, genuine. Let me explain. The sad fact is that quite a lot of people are actually stupid and they do fall for these tricks. And they are effectively tricks. Okay, so here's an example of a trick that lenders use because they know that quite a lot of people are stupid and they'll go with this. They're offering a first-time buyer deal, for example, that has £1,000 cash back, but it has a £999 fee. There's a pound in the transaction. It doesn't make any sense when you put it down on paper. Now, the reason is it's all psychological, and the reason is how it's positioned. So, £999 arrangement fee. If you physically had to hand over £999 when you walked in and said, I want that mortgage, here's £999, as if you were purchasing an item from a store, okay, you would find that massively uncomfortable, and you would think not twice, multiple times over whether you do that, okay? They make this decision very, very easy by saying, don't worry about that, we'll add it to your mortgage. Okay, so that's, you haven't handed anything over, you haven't seen the money, they've just added it to the mortgage for you. So they've effectively lent you it and added it, okay? They're now going to charge you interest on it. The £1,000 cash back is generally paid to you after completion. So you get your keys, and then you get £1,000 paid into your account or via cheque through a solicitor, however it's done. The key here is a lot of people, especially first-time buyers, will go, oh, I can use that towards my solicitors. Not realising and putting the two and two together that you've actually just borrowed this money off them. It's no different. It's great, don't get me wrong, it's great if you do not have the funds, but for somebody who already has the funds for solicitors and already has the funds for deposit, it's really, there's no point doing it, okay? So I would advise you not to do that. And people do fall for this hook, line and sinker every single time, purely on the basis of how it's positioned. They've positioned it in a way that lets you think that you're getting that money for nothing. Banks don't work like that. They give nothing for nothing. They're only there to make money. Remember that.